want to understand where liquidity lies, well, it lies above highs and below lows, okay? So high, we have a move.
See, this is the thing with ICT traders. Liquidity is not above high and below. Of course, there's liquidity, but it's everywhere, okay? You can't just say, hey, above a high, there's liquidity. Maybe above a high, there's some buy stops, but there's also sell limits. You know, it's both sides of the auction. Like if liquidity is orders, right? The total amount of orders is the total volume. If you draw a volume profile on that same price action, you will see that the lowest amount of liquidity is in the spikes, where the liquidity is supposed to be grabbed. Most of the orders are actually inside of that range. So why would they move billions of dollars to go to the other side of that range just to see if there's a bunch of stops from retail? This doesn't make any fucking sense. I mean, you can still be profitable with fair value concept, which is all auction market theory, by the way. ICT didn't invent anything. He just made it popular. But when you're mentoring, you should at least know what you're talking about.
Show a couple of examples of liquidity sweeps where we can see like, hey, this liquidity thing, it's pretty freaking for real. What do we have? A high. What do we see price do? Sweep work, fill all these orders, and then what happens?
Fill which orders? You can't see those orders. That's the point. If you use the footprint chart, for example, you would be able to see if there was any orders whatsoever there, if there was an absorption of orders, if it was a simple stop run, or if it's a failed auction and an exhaustion. But all these have very different ways to be considered.
Price just rumbles on.
By the way, he's so fun. I love the guy.